Good morning and welcome to today's episode of Crypto Insights. I'm joined by my co-host, and together we'll be diving into the biggest market-moving stories in the world of cryptocurrency.
That's right. Today we're seeing some significant developments in the space. Ripple's CEO Brad Garlinghouse is making headlines with his call for a diversified U.S. crypto reserve. Let's break down what that means.
So Garlinghouse is essentially advocating for a digital asset reserve that encompasses multiple tokens rather than just one. This is a pretty interesting move, especially considering the current landscape.
Absolutely. The idea of a U.S. strategic Bitcoin reserve has been floating around for a while now, but Garlinghouse's suggestion takes it a step further. He wants to see a reserve that includes a variety of tokens, which would likely have significant implications for the market.
And it's worth noting that this isn't just theoretical. Polymarket is currently showing only a 19% chance of Trump announcing a BTC reserve in the first 100 days of his administration if he were to be elected.
That's a pretty low probability. But regardless of the politics, Garlinghouse comments are sparking an important conversation about the role of digital assets in the U.S. economy.
Shifting gears a bit, MicroStrategy is making waves once again with its latest Bitcoin purchase. The company has added 10107 Bitcoin to its holdings, marking the 12th consecutive week of buying.
That's a staggering amount of Bitcoin. And what's more, the company has announced a preferred stock offering to continue its accumulation efforts.
Exactly. According to Michael Saylor's tweet, MicroStrategy now holds an impressive 47110.7 BTC. It's clear that the company is committed to its Bitcoin strategy, and it's going to be interesting to see how this plays out in the coming months.
And it's worth noting that this move is likely to have a ripple effect on the market. We'll be exploring this theme further throughout the episode, but for now, it's clear that MicroStrategy's actions are a major catalyst for market movement.
Absolutely. And speaking of market movement, we're seeing some interesting trends emerging. We'll be diving deeper into the technical analysis later in the episode, but for now, let's just say that the next few weeks are going to be critical for the crypto space.
That's right. We're at a bit of a crossroads, and the decisions made by major players like MicroStrategy and Ripple are going to have a significant impact on the direction of the market. We'll be exploring all of this and more throughout the episode, so stay tuned.
We were just discussing how regulatory bodies are taking a closer look at the crypto space, and it seems like the U.S. Department of Justice is leading the charge. KuCoin has agreed to settle charges with the DOJ by pleading guilty to operating an unlicensed money-transmitting business.
That's right, and the fine is substantial, nearly $300 million. According to the DOJ, KuCoin was used to launder billions of dollars in proceeds from darknet markets, malware, ransomware, and fraud schemes.
This is a clear example of the risks associated with operating in the crypto space without proper licenses and oversight. KuCoin's decision to plead guilty and exit the U.S. market is likely a strategic move to mitigate further damage to their reputation and business.
It's also worth noting that this settlement comes at a time when the U.S. government is shifting its stance on emerging technologies, including crypto. As we've discussed before, there's a growing interest in digital assets among institutional investors and policymakers.
Speaking of which, we saw a significant influx of investment in crypto products last week. According to CoinShares data, Bitcoin and Ethereum ETFs added $1,900,000,000 in inflows during the 7-day period through January 25.
That's a remarkable number, especially considering it's the second consecutive week that inflows have hovered around $2 billion. It seems like the strong demand for digital assets is sustained despite some volatility in the market.
This trend is particularly interesting given the current regulatory landscape. As we discussed earlier, the U.S. government is taking a closer look at the crypto space, but it seems like investors are still bullish on the long-term potential of digital assets.
Building on what we discussed earlier, it's possible that the growing interest in crypto among institutional investors is driving this trend. As more investors enter the market, we may see a shift towards more mainstream adoption of digital assets.
It's also worth noting that the current administration's stance on emerging technologies may be playing a role in this trend. With the Trump administration's busy first week in office, it's possible that investors are seeing a window of opportunity to invest in crypto before regulatory changes take effect.
Whatever the reason, it's clear that the crypto market is still attracting significant investment and attention from institutional investors. As we move forward, it'll be interesting to see how this trend continues to unfold and how regulatory bodies respond to the growing demand for digital assets.
I'd like to build on our previous discussion about the AI sector and how it's influencing the crypto space. We've been seeing some significant developments lately, and one story that caught my attention is the massive drop in NVIDIA's market value. The company lost a staggering $600 billion in a single day, which is the largest single-day market.
That's right, and it's all because of the emergence of DeepSeek, a Chinese AI startup that's been making waves with its low-cost AI developments and high-performance capabilities. NVIDIA's stock took a huge hit, plummeting 16% in a single day. This slump is not just limited to NVIDIA, though. The entire U.S. tech industry has shed an estimated $1 trillion in market value.
This is a clear indication of how the AI sector is rapidly evolving, and traditional players like NVIDIA are facing stiff competition from new entrants like DeepSeek. The fact that DeepSeek's AI technology is open source only adds to the pressure. It's going to be interesting to see how NVIDIA and other tech giants respond to this challenge.
Absolutely. And speaking of responding to challenges, I think it's worth noting that the crypto space is also seeing some significant developments. We've been talking about the growing interest in ETFs, and now Tuttle Capital Management is seeking SEC approval for the first ever Chainlink, Cardano, and Polkadot ETFs.
That's a great point. The fact that Tuttle is testing the waters with these filings suggests that there's growing demand for more diverse ETF options. And it's not just limited to the major cryptocurrencies. They're also proposing ETFs tied to smaller projects like the Melania meme coin and Bonk.
Exactly. This is a clear indication that the crypto space is maturing and investors are looking for more ways to gain exposure to different assets. Of course, it remains to be seen whether the SEC will approve these filings, but it's definitely a step in the right direction.
I think it's also worth noting that these developments are not happening in isolation. The growing interest in AI and ETFs is all part of a broader trend towards greater innovation and diversification in the crypto space. As we've discussed before, the lines between traditional finance and crypto are becoming increasingly blurred.
Absolutely. And as we move forward, I think we can expect to see even more exciting developments in the crypto space, whether it's the emergence of new AI projects or the approval of more ETFs. One thing is certain, the crypto landscape is changing rapidly, and we need to stay ahead of the curve to make sense of it all.
We've been discussing the regulatory environment and how it's impacting the crypto space. Speaking of which, the Lunar New Year is upon us, and some are looking to the stars for guidance on what's to come for Bitcoin and the CoinDesk 20.
That's right. The Year of the Dragon was quite eventful for the crypto market, with both Bitcoin and the CoinDesk 20 performing well. But as we enter the Year of the Snake, some are predicting a twisty and challenging time ahead.
CLSA, a Hong Kong brokerage, is one of them. They're warning that the year will be marked by market volatility and uncertainty. But what does this mean for investors and traders?
Well, it's worth noting that the Lunar New Year is a significant event in East Asia, and many markets will be shutting down for the holiday. This could lead to a temporary lull in trading activity, but it's also an opportunity for investors to take a step back and reassess their strategies.
That's a good point. And speaking of strategy, SoFi Technologies is signaling that it's ready to dive back into the crypto space. The company's CEO recently detailed plans for an aggressive return to crypto, pending clarification on crypto rules from the SEC.
That's a big development. SoFi was one of the first mainstream financial institutions to offer crypto trading services, but it wound down those operations in 2023 due to regulatory uncertainty. Now, with the expectation of clearer guidelines under the new SEC leadership, the company is looking to get back in the game.
And it's not just SoFi that's watching the regulatory environment closely. Many investors and traders are waiting to see how the SEC will approach crypto regulation under President Trump. There's a sense that the agency may take a more permissive approach, which could be a boon for the industry.
But it's also worth noting that the SEC has been clear about its concerns regarding crypto, particularly when it comes to investor protection. Any new regulations will likely prioritize these concerns, so it's not a guarantee that the environment will become more favorable for crypto companies.
That's a good point. As we've discussed before, regulatory clarity is essential for the growth and development of the crypto space. But it's also important to remember that the SEC's primary responsibility is to protect investors, not to promote the interests of crypto companies.
Exactly. So while SoFi's plans to return to crypto are certainly interesting, it's just one piece of a much larger puzzle. We'll be keeping a close eye on developments in the regulatory space and how they impact the crypto market.
We've had quite a day in the crypto world, and I want to circle back to some of the stories we discussed earlier, starting with Jim Cramer's comments on Bitcoin and MicroStrategy. He made it clear that if you want to own Bitcoin, you should just own Bitcoin, not MicroStrategy.
That's right. It's interesting to see Cramer's shift in sentiment, especially considering he was calling for an exit back in January when Bitcoin was surging. Fast forward to now, and the asset has more than doubled in value.
Exactly. And what's even more fascinating is that despite his previous calls, Cramer is now advocating for owning Bitcoin directly. It's a testament to the asset's resilience and its ability to defy expectations.
And speaking of defying expectations, let's talk about the rebound we saw in Bitcoin's price following the DeepSeek panic. It's impressive to see the crypto market bounce back like that, especially after the weekend's volatility.
Absolutely. Monday evening's rebound was a noticeable recovery, and it's clear that investors are reallocating to their favorite crypto assets. It's a trend that's been building momentum, and it'll be interesting to see how it plays out in the coming weeks.
One thing to keep in mind is that despite this rebound, Bitcoin is still down about 6.5% from its all-time high near $19,000. There's still some ground to make up, but the fact that it's hovering above $102,000 is a positive sign.
So, what are the key takeaways from today's stories? For one, it's clear that Bitcoin is still a force to be reckoned with, and its price movements are going to continue to be a major focus for investors.
Another takeaway is that even the most seasoned investors and analysts, like Jim Cramer, can change their tune when it comes to Bitcoin. It's a reminder that the crypto space is constantly evolving, and we need to stay adaptable.
And finally, the rebound we saw in Bitcoin's price is a testament to the market's resilience. Despite the volatility sparked by DeepSeek's announcements, investors are still confident in the asset's potential.
As we look ahead to the rest of the week, it's clear that there's still a lot of uncertainty in the air. But one thing is certain: Bitcoin is going to continue to be a major player in the crypto space, and its price movements are going to have a ripple effect throughout the market.
That's all for today's show. Thanks for joining us on this journey through the world of crypto. We'll be back tomorrow with more news, analysis, and insights.
Until then, stay informed, stay vigilant, and we'll catch you on the flip side.